Morning, everyone. Darren from Leviathan speaking to you from the CME trading floor. Although I'm actually on the side room at the moment, so it's a little quieter than normal. But I'm here with you for your morning rundown as to what is going on in the markets. Well, as usual, we are focused on the geopolitical news and anything that is going on out of Iran. However, overnight we had more. I don't know. It says it's kind of positive news because Trump's suggesting that talks with Iran are continuing at a rapid pace, and that an agreement will be made, and that the ceasefire will be extended. So this has lent to. If you bear with me a second. So fixed income, which is what we're specialising in, we've eased off a bit as far as yields go. We're up moderately here, as you can see here. 10-year trading 110.01.5. A little bit off its highs, but still, still positive on the day. Oil has rallied back to unchanged. That was off nothing too drastic, a couple of bucks there. And the fixed income markets, this was the one that we've been looking at mostly. That was on our open here because fixed income opens up a little earlier than the equity market. Was trading around 16 and a half, near the highs, which was implying around a 73% chance of a hike by the end of the year. And now we've gone kind of like gone back to around an 88% chance of a hike. So as I had, and also sorry, we do have our in 20 minutes the JOLTS job opening. That's kind of about the only economic indicator we've got going on. Overall, though, you'll see you'll come in. S&P, as per usual, is just always strong, but we're trading around the 7,600 area. It's off like 14 ticks, which is nothing. So you'll see that. I mentioned yesterday I was going to put out a piece later on in the afternoon. I didn't get a chance to. So apologies about that. But we can actually hang on. Look at something today. Hang on one second. Which is basically for the rate market. So as soon as I can get this window up, hang on. Right, here you are. So, two things. So, first of all, let's look at what we did on a run. We updated that this morning, which was basically looking at targeting the potential for two hikes. Now, the trade I really like here, if you believe that the war is going to be ongoing and that inflation is definitely the thing that's going to be the risk, I love this trade. It's the 5780, as we call it here, or the 9575, 95.5, 9600 put fly. This you can get at a tick or even less. Actually, we think you can probably get in at 7/8 equivalent. If you want to know how to do that, you're going to have to call us to execute your trade for you. But it can be done. leg synthetically. So after costs, you're getting in at under $1. And as always, as you'll see, a piece I'm going to put out tomorrow, which is going to be the rules of trading. The idea is to keep you guys in the game. We want you to have less risk, more reward. And so we don't look at these, when we put these trade ideas out, we are not looking to expiration. We are looking for your trade to be get out like in a realistic time frame. We are looking to get you out with the latest a week before expiration. So in that instance, we think we could get you out at like about 7 ticks on this, 7 full ticks at one point when it comes down to it. It won't be its full potential, but we're just looking to capture this, that 600% return. So that is the trade that we like there. Just to go into more detail, you can also see is very low in its ranking. The same equivalent out the money put fly. Price wise, we're in just its 9th percentile. So that's the thing is, like, even though we are in a potentially inflationary environment, the market is favoring the fact that, at least trade wise and skew wise, that we're actually not going to move rates. So these things are priced really cheap. So if you can capture this 0.875 or anything under a tick, I think it's a do. So that is a great downside trade. Now my compatriot put out a piece here. Again, if you want this PDF and you want the details on it, DM me and I will be able to message you back. But basically in September, this particular call fly, as we refer to it, 2+, 5+, 6+ call fly. This will capture your unchanged rate and change back in cycle and take advantage, as you can see here, of the high call skew that we have. The ranking of this particular call fly is in its 36th percentile. But look at that heat map. How much do you love that? It monetizes very quickly if anything changes. So that's the one thing I really love about this trade, is that if you like this trade, if you believe in the fact that we will return to normal, likelihood, no change in rates, or bear in mind that we were on a cutting cycle at the beginning of the year, and it's only this war that has changed the way things are. So this is a fly that I would do. That heat map just looks so good. Your downside is literally the premium you're paying out, and you can make some huge returns on this, even shorter term. So this is the trade that I would suggest for unchanged rates, and the other fly for a potential increase in the chance of moving rates. So that's basically it. Otherwise, it's a pretty quietish session so far. As always, we're just sitting, waiting for more geopolitical news to come out. And so, once again, if you like any of these ideas, please DM me on the website, www.leviathanfm.com. That's that bit here. You can see that there. You'll be able to contact me through the site, and we'll be able to send you any further details of these trades and how to participate. But other than that, otherwise, as I always say, have a It's always better to be lucky than be good. So, as always, best of luck trading, and yeah, have a good day, everyone.